program is brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. IG, where traders are made.
Okay, let's talk today. One that I choose that's in the news. Lendlease in the news again. The real estate company selling its US military housing business for $480 million. Deal expected to deliver operating after-tax profit of 105 to 122 mil in the first half of the FY25 financial year. Lendlease said it's refocusing on its Australian operations after a recent radical strategic reset. Revised operating profit for FY24 now expected to be between 260 and 275 million. Let's take a look at how the stock is faring today, up 2.5%. Nathan, this is sort of the next step in Lendlease getting out of all its offshore operations, isn't it? Who knew they had a big US defence housing business? I had no idea.
This has got a lot of pieces. You need to do a PhD to understand how this plays out. I mean, it's a huge conglomerate, massive pipeline. I guess it all comes down to where you are in the cycle. When it works, this will be one of those massive leverage plays. When it doesn't work, it's a massive leverage play on the wrong side.
Right.
So the cycle is against them. We actually jumped in at the end of last year. It got smashed down to $6. At that point, the recent strategic changes and all weren't there. And it had a good bounce back. It bounced from about $6, low sixes to low sevens. We had a good run, and we were going into that February result. We got out before the result.
Oh, right.
Because there's too many moving parts, and we've had a good run. And the music did stop and got hammered. And it's been sliding. And then since then, we've had the strategic change. This is an interesting one because what makes it worth the risk is the pipeline, which is kind of global, which is kind of diversified. When they want to unwind that does come with risk. It's not as simple as what people think. Oh yeah, we'll just sell a few things. Yes, selling a few things will improve their balance sheet, but it also curbs their growth outlook, raises the risk because your diversification is reduced. And my worry is, and the market is smelling that, the next result is probably going to have some time bombs. And I think that's what the market is worried about, and I would be worried about that too. It looks cheap, but it's not cheap. I think there's still, the cycle has to play out. Construction, I think the construction cycle where the costs are and so forth, it's still going to struggle. I don't see interest rates coming down anytime soon. So this is going to struggle. The sector is going to struggle, the overall, and the construction and the property sector will struggle, and Lendlease on the back of that. So it's one where it's come back a long way, and it probably will keep going lower into the result. Look, if it bounces 20%, who cares? It's cheap. I would be waiting for the result to see where the numbers are.
Right.
I suspect there will be a lot more deals that'll be done. They'll be reducing that to improve their balance sheet. I think debt to equity is a bit of a worry, and all of those things will play out. So for me, it's a watch and wait. It looks cheap, but this is not a time to jump into that sector for the ugly one. I mean, the good ones, not now.
If you're in it,
you've been it's psychological. If you're in it, you're not going to do anything because you're going to be like a headlight in front of a deer. I mean, deer in front of a headlight. So you're going to just stand there and look at it. And I've done that before. I would say you're probably going to sit there and hope the management does a decent recovery cycle. And you hope that the result in July, August kind of holds up. But I think the risk is still pretty high.
Okay. Because there's no construction happening. I've got a mate who works in the property game and has one of the biggest, most well-known REITs as a client, and he was saying they would from this REIT get a proposal once a month to look at a property or a project. He said, we haven't had one this year. Not one this year, because they can't get construction costs to balance up with the financing of any new development. So they're just doing nothing.
Well, I live out west by choice because my family is there. My parents are in the east. It's too bloody expensive. Around the west, the construction cost is so high for residential property. People are paying high prices for newly built houses, like ridiculously high prices. I mean, one of the houses that went for sale and actually sold on my street, unless you're drug dealing, that just doesn't make sense.
Right.
Right? And I was sitting there going, that property is smaller than mine, on a smaller land, and the bedroom, I can flip a cat and hit every wall from the middle, right?
Yeah.
And that's the biggest bedroom. And I'm going, they were paying $3 million for that house.
Yeah.
And this is out of West.
Yeah.
It just doesn't make sense.
Yeah, construction costs just not.
And that's the problem for these guys. And we were in a number of service companies for our clients. We got out of all of them at the end of last month, not June, sorry, end of May, because all our numbers were saying inflation is going back up.
Yeah.
Right?
Yeah.
And inflation going up for these guys, bad.
Ridiculous. Kai, what's your view on Lendlease?
Absolutely. I agree with completely in terms of where we are in the cycle. Obviously inflation last month came out very strong, 4.0 expected, and it's kind of a tricky position on where RBA will go, whether they'll actually hike rates to stop what seems to be increasing inflation. And I think obviously this plays fairly bad towards Lendlease in the construction sector, and I can relate to where the construction costs have been going up higher. I do talk to some of the construction guys as well, and exactly right. Their margins are being compressed. The cost of the materials.
So they're just not going ahead with projects.
Yeah, but in a positive spin for Lendlease, I do think it is good that the management is kind of tying down their books and cleaning everything up. And focusing on the Australian operations. I think in terms of diversification, sometimes it's a bit overplayed globally. There might not be growth prospects, but at the moment, they're not making money. So, they need to get back and simplify the operations to basically get back into profitability and then grow again.
Yeah. I noticed the old boss of Lendlease has taken on Star. And go, gee, this bloke has got to have a particular character. Well, he just takes on.
He knows where he's going to get paid well.
Right.
Yeah, it's a risk return plan.
For the hires.
Right? To Kai's point on RBA, it is amazing how many takes on the rate hike expectation. Statistically speaking, they're not going to move. Right? Inflation is going up. Everyone knows inflation is going up. They're not going to move. They will say it's transitory. Right? They'll put up data points. You can always look.
The Treasurer said that on the weekend.
Yeah, exactly. And I can look. I work with data. I can always get a data to show what I want to say. So that you can play that. But the reality is, we're in 4 quarters of negative per capita GDP, right? It's already. We're not worried about the poor people, right? It's about asset bubble, right?
Yeah.
And so commodities are weak. We've only got the property bubble. They're not going to attack it. So.
No.
Unless the Fed hikes, the RBA is not going to hike.
Yeah, that's the other point. It puts them into a tricky position where a lot of central banks across the world have actually cut rates. It's a different story, but still it puts them in a tight position where if it hikes and they have to correct that in the next year, it's very difficult.
But the other part of the RBA charter is full employment. So
it's a catch-22. You can't have one without the other.
No, and you just get the feeling, I don't know, just looking around your area and through the city here, this low unemployment doesn't match what I'm seeing, business insolvencies, record highs, your Telstra's and your Minres is laying off thousands, shops in the centre of the city, retail, big employer, all closing up, and you think, gee, is there a lag?
It is.
And unemployment will spike, sure.
Employment is massively lagging indicator. Yeah. That's why historically, once it moves, cutting rates is too late. And that's why the Fed, in the last 70 years, has never managed to have a soft landing once inflation goes above 5%.
Right.
And it ain't happening this time either.
Yep. All right. Okay, the bear talks. That's it for our stock of the day, Lendlease.
This program was brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended hours on key US shares and competitive spreads. All on an award-winning platform. IG, where traders are made.